Hey, welcome FreightWaves fans. Thanks for coming back again here on the fifth and last day of the week, Friday, and we're going to give you a little bit of a heads up into what we're looking at for the weekend. But right now, of course, it's FreightWaves Now. We are coming to you right now with what's happening right now. We've got not one, but two, but no three market experts to bringing the heat to you right now. Or is it the cold? Well, we don't make the weather, but we can tell you about it. And so Nick Austin leading off, Donny Gilbert, one of our market experts, and last but certainly not least, John Paul Hampstead, our associate editor. He's kind of all over the place today. What is he bringing? I couldn't even tell you. I think it's a little macroeconomics. Donny talking to us about reefers and the tender rejections on that. So let's get started. Welcome, Nick. Hey man, Chad. You have been the star of the show this week, it seems like, because boy, that polar vortex and the 80% of everything. Tell us, like, what's happening today?
The weather has been the star. Let's put it that way.
Okay.
But yeah, so across the Midwest, where we had all that just freezing cold weather, the Arctic outbreak, the polar vortex, things are starting to get better today because temperatures will get above zero, which is a big deal for these people. Because,
above zero.
Because they've been below zero just about all week. Man. From the Dakotas all the way over to Cleveland and Chicago and all these big cities there. And a lot of those pretty big markets. So
bless their hearts, as we say.
Bless their hearts, and things are going to get even warmer through the weekend. I mean, dozens of cities had record low temperatures, including major cities. Not only record low temperatures at night and in the early morning hours, the actual lows, but high temperatures have been so cold that they've broken records for the coldest high temperature. So
interesting.
What's going to happen is over the weekend, as the daytime highs get warmer, well above freezing, even into the 40s for a lot of areas.
Whew.
There'll be snow melt, there'll be slushy roads.
Okay.
And then at night, when temperatures get back down below freezing, a lot of that will refreeze, so there'll be problems with black ice across the Midwest.
Black
and the
ice. I'm looking forward to the return of vanilla
ice. I knew you were going to say that.
Oh. Well,
you figured it'd have a comeback by now if it was going to happen.
Okay. Well,
anyway, but that's going to be a problem
what's happening out here? It's just this is a lot of green.
There is rain approaching the West Coast. There's going to be periods of very heavy rain, maybe even some thunderstorms for the California coast, from San Francisco all the way down to San Diego, off and on through the weekend. Okay. So there could be problems with localized flooding, maybe even along the I-5 corridor. There could be some problems with mudslides. They've already had some problems with that yesterday. So mudslides, possibly rock slides, debris flows. And in the Sierras, there's going to be a lot of heavy snow coming back to the Sierras of Eastern California off and on through the weekend. So
good time for the skiers.
So good time for the skiers, but any drivers having to go through Reno, Lake Tahoe, and through the Sierras, it's going to be pretty rough. It's been quiet there for a little while, but they're going to get a couple of big storms back over the weekend.
Okay. And actually, I mean, you say there's a reprieve of some sort, but, this still looks just like more of the same brutal.
It has been snowing today across the Ohio River Valley, nation's capital. Okay. Traffic's probably slow on the Beltway and up towards Philadelphia.
Yeah.
But a lot of that is going to fade later today, so it's not going to really do much over the weekend. Things are going to be improving for the Northeast and the Midwest, where it's just been ungodly frigid up there.
Thank goodness. Yeah. Looking for the bounce back, the thermal, let's get some thermal stuff happening over there. I'm no meteorologist. All right, so without, bringing in our next market expert, Donny Gilbert, bringing it to us, talking about reefer again, right?
Well, we're talking about Indianapolis.
Indianapolis. What is that? Okay.
So we've been through the weather the last couple of days, and I decided to bring up just kind of a good market in the middle of the Midwest and take a look at Indianapolis today. So our tender rejections and our volumes here on our first map. We're looking at volumes. Volumes 210. 210 is about 2% of the U.S. market share total. So it's a decently strong market for what's going on right now in late January, early February. And we're looking at a tender rejection of 10.66, which is just a little bit above the U.S. average. So this is considered a pretty strong market for what's going on right now. You got strong markets like Atlanta, Chicago, LA's a lot stronger, and those are leading the way right now. So a lot of the
and you're noticing this is you've taken us a good ways back. So we're watching this, and then 2019 It's corresponded with a lot of what's happened around the country.
We finished up the holidays, and then your tender rejections dropped down, and
a little above the national average, you're saying?
A little bit, just a few points above the national average.
Okay.
So when we talk about the tender rejections, it's always good to kind of dig a little bit deeper into what's going on if you're really wanting to look into that market.
Okay.
So today we broke this down into both reefer.
And here is the reefer tender reject index.
And then there's the city, mid, and long haul loads.
Okay, explain that to our audience, please.
City is local. That's just, within the city, within 25 to 50 miles.
Of Indianapolis.
The mid is out to 250 mile range. Out to 400.
Okay.
So it's a good 1 day's run.
Right.
And then your long haul is 800 mile plus.
So a big jump.
Jump.
From that. Okay. Well, this is interesting. We haven't pulled this kind of information up yet on FreightWaves Now. So thanks for bringing it.
So we were looking at a 10% where we're showing a rejection rate, and looking at your city, 2.53. It's a very, very low number.
Yes.
That means a lot of your local loads, they're being accepted.
Right.
They're being ran.
Is this? It's normal though, right?
It is to a degree, but this also just tells us, even though we're running up, that if you see a short run like that, it's going to be a good run to accept.
Yeah.
And that you can be profitable with and run.
Okay.
So then we go to the mid length of haul. 17%. It's jumped there the past a few days too as well.
Right. I see the little
So part of that could be the weather of the past couple of days being turned down a little bit more because of the cold weather, not having reefers, whatnot. And so they're leaving those, and those might drop a little bit as we go through next week.
Okay.
So that's less likely, and also that means the rates might be a little bit further elevated. Long haul's 9.44. Long haul, let's get a load and let's get out of the Midwest.
So maybe that's why the tender rejections are lower than they are for the mid haul.
They're liking the long hauls a lot better.
Yeah, get me out of there.
Better miles, let's get out of the Midwest. And if you can go out to the markets such as LA that are still fairly strong, that is a good market to go to. LA is probably one of the strongest markets in the US right now. Last but not least, let's look at this booger right here.
Reefer.
Rejection rate of 30%. And you can see over the last couple of days how it's climbed. And this is definitely with the cold weather.
Yes.
As the cold weather started to hit, that number started jumping up. That is, again, where we see where your reefer carriers are seeing better rates than their contracted rates. And they are going straight to those loads and rejecting the lower rates.
Because they got to protect that cargo. It might be refrigerated, but don't mistake that they also have to keep it from freezing, right? As we covered on Wednesday.
And they're enjoying the better, higher rates.
Makes so much sense. Well, thank you, Donny. Market expert Donny Gilbert bringing it to us, looking a little bit at a mid-sized Midwest market and how it's corresponding with tender rejections here at the, very first day of February. John Paul Hampstead, how you doing?
Good, Chad. It's glad to be back. I'm going to keep it pretty simple today.
Okay.
One big number, but there's a lot of other implications. There's a lot of things feeding into this. It's kind of a scary number. So if you can't handle it, you might want to cover your eyes. But we're talking about .vf.vnu. This is the national average spot rate for a dry van over the whole United States, down to a really super low $1.38 a mile. Let's call it $1.39 a mile.
That must be reaching some kind of threshold. That is
it's really
so
low. It's down 19% year over year, as you can see from this trend line. Obviously, new year, new you. Sorry, lower prices.
So because last year was an anomaly, but is this typical January?
Well, it's typical slow January, but what's atypical is the higher contract prices over the past 12 months, call it, have led to a lot of capacity coming into the market, right? We know that wages went up. We know that there were record truck orders. We know that the employment data shows that people were coming into the industry. So although on the demand side, it's a typical slow-ish, cold, a sluggish January.
Yeah.
The supply side is making things worse because there's more trucks.
So much
there's
of
more
it.
trucks because we had the end of a long upcycle that brought people in. So now that slack capacity is driving rates even further down.
Wow. Well, that's some interesting analysis because you're bringing in together a lot of different pieces of the puzzle. So, well, thanks for that brief, but in a way, deep dive. Did you want to?
Yeah. One other thing. The signals for the demand side aren't looking so great either. Actually, going into the rest of the first quarter and even the first half of this year. Ibrahim Bayan, our chief economist, and Craig Fuller, our CEO, did a monthly market update webinar yesterday. And Bayan, he used to be one of the chief economic forecasters for UPS. He talked about sort of the macroeconomic data and really broke it down. He was saying that he expects GDP growth to come in actually under 2% for the first quarter of this year, partially due to about a 20 basis point hit from the government shutdown. But he said that's not the worst part. The worst part is when you look at the economic factors affecting freight movement, industrial activity, international trade, oil production, and housing. Those are all actually the weakest parts of the economy. So the economy, decelerating to trendline growth overall, but the freight economy is actually quite soft and fairly weak. It's getting started off a pretty weak position in 2019.
So, well, who would you say is most at risk here, most getting beat up in this? Is it the carriers,
it's the carriers.
brokers?
It's the carriers.
They're at risk.
It's the carriers,
right? Mostly carriers.
Mostly carriers. I mean, the brokers are going to see. It depends on what type of broker. So if you're buying, if you're selling capacity at contract rates and you're buying at spot rates, you're going to be fine. If you're pure spot, you should still be able to wheel and deal and make some margins, but overall dollars per load, it's going to be lower just because price is so low.
Yeah.
It's really the carriers that have something to worry about. Your large enterprise carriers that have been, they've seen this coming. They've been trying to get deeper in their customer supply chains. They've been looking for more dedicated freight. That insulates them from these downturns, but it's sort of your mid-size, your smaller carriers, and especially your owner-operators who are going to be kind of fighting over scraps in this economy.
Okay, well, I apologize for the bad news and the tone of which we're having to end on, but no, honestly, this is what is happening right now, and we have to prepare. We can't we don't create the economy, but we can predict it with the broken data, such as it is. Bayan was also talking about how there was a lot of incomplete data yesterday. As we all saw, as he gave us demonstration after demonstration of because of the government shutdown and because of the lack of some data. But best we know, with these indicators, kind of buckle up and just get prepared for what is happening. And we are bringing it to you each and every day here on FreightWaves Now, every business day. So thanks for tuning in, and stay safe out there in these difficult conditions. Check us out on FreightWaves.com and Twitter, please. Share the love, and anyway, stay safe out there. Don't worry. Be happy.